Hey everyone, Ben here with another weekly market update for the Twin Cities real estate market. Just going to dive into what the recent data is showing for the velocity of the market and where we're at for the beginning of October, heading into the fall season, into the quieter part of the overall market, and I'll see what things are looking like. All right, so new listings over the past 3 months. Definitely slowing down on new listings, but still just a little bit higher than last year over the past 3 months, up almost 3%. Not a dramatic change there. The bigger change is in the pending sales. They're down 5% over last year, but definitely starting to get a little room there, up 4% over this past week. So we'll see if that trend holds steady with interest rates coming down. That might start getting more buyers into the market, increasing the pending sales. Overall, inventory of homes are up nearly 15% over the same time last year. We've crested over this 10,000 mark for total listings on the market this summer and into the fall. And this will probably increase a bit as we head into the winter before levels kind of plateau. Median sales price, again for August, up 2.2%, which is definitely in more of a normal range for the real estate market. We definitely saw some crazy numbers in the 2020, 2021, and now things are kind of back to a normal kind of level, and that's good. Housing affordability index, still very tough to buy a home right now because prices are high, interest rates are relatively high. So it is a tough time to buy, but it is a good season to buy overall, and we'll get into that here. So talking about interest rates, this is over the past year. We peaked out about 8 about a year ago, and it's kind of had this gradual decline. We had some really good news. In early September, we got down almost to 6, and now with the jobs report that came out really strong, the bond market is responding to say, oh, well, I guess the interest rates aren't going to come down as quickly as possible or as quickly as intended. So this week will be a big week for core inflation numbers coming out to see. I think the Fed will make a reduction in the prime rate, but it might not be as big because the job market seems to be pretty strong still. So it's kind of like this good and bad thing for the overall economy. Going into the market meter, this is over the past several years, showing the peaks and valleys of the seasonal market. This summer we peaked out at about almost 7.5, which is a borderline strong seller's market. Not as high as the past couple years, of course, because the demand wasn't as strong. So it was, and then over the late summer into the fall, we've kind of bottomed out here in the low threes. So this is definitely one of the best buying markets for competition, access to inventory. Inventory is at its highest it's been in years. Competition is low, so if you can stomach those interest rates a little bit higher, this is definitely a really good time to be in the market. And you have to go all the way back to 2019 to see a number this low for on the market meter. So that said, it's a good time to buy overall. There's a lot of inventory. Interest rates have come down, but they're still in the higher range. There's actually some great down payment programs out there now with the state and other programs to help people with those down payments, because that seems to be one of the biggest barriers to the buying process. So yeah, I hope that helps. If you're thinking about selling, I usually around this time of year, if you can wait until January, February, I would definitely try to do that, because the buyer, the inventory out there is as high as it's ever been this year, and the buyer energy is slow. So hope that helps, and be sure to hit a like button on there and subscribe if you want, and we'll talk later. Thanks, everyone.